Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today Beth Kobliner. She authored Get a Financial Life, Personal Finance in Your 20s and 30s. Get out of debt. Beth, welcome to Traders Nation. How are you today?
I'm great. It's great to be here. Thanks.
Good. Now more than ever, one's in their 20s, 30s, 40s, or whatever T's you want to call it. Aren't we forced to get a financial life at this point?
Well, the economy is in such trouble right now, and people are reeling. We see unemployment at 25-year high. People have huge amounts of debt.
Yeah.
Young people have credit card debt, student loan debt, and they have to figure out how to get a handle.
Yeah. What's the best way for anybody at this point, and no matter what, 20s, 30s, 40s, or whatever, if they have debt, how can they start to eliminate some of that?
Well, you want to pay it off, obviously, as quickly as possible, and you don't want to miss a payment. A lot of people don't realize the technology is so advanced right now that if you miss just one payment, it'll end up decreasing your credit score, and when you go to apply for a loan, an auto loan, a home loan, or even on your current credit card, it will result in the interest rate popping up. So don't be late and pay more than the minimum if possible.
All right. Now, also, too, and I've experienced this online where some of these credit card companies, you go to make a payment online, you really should have to make sure that that payment actually goes through and get a confirmation email number or something, because if you got like a 0% interest, this would happen to me. You get like it's 0% interest, and if something doesn't go right and you think you made the payment and it didn't go through, not only do they probably decrease your credit limit, but they also bang you up that 28%, and what are you going to do about it?
Absolutely. Well, the one thing you can do about it, and people don't realize this either, if it's a one-time mistake, you can call the credit card company.
Yeah.
And, they're a little cranky right now because the economy isn't doing so well.
Right.
But you can call them and say, look, this was a one-time mistake, and there's a very good chance that when you call person to person, they will lower the rate back down, or at least give you something a little better than 28%.
Right.
So a lot of people don't realize that. I sit with people and say, just call your credit card company, see if they'll lower it. And they often do. So just picking up the phone or transferring, if you have a few cards, transferring all the debt to one of the lower interest rate cards really can make a difference.
All right. So do we go for accounts that have the lowest balance to try to pay that off, or do we go with the accounts that have the highest interest rate?
There's no question. Go pay off the high-rate debt first. I know there's all this psychology that people talk about, but the bottom line is if you have a credit card that's charging a rate of 6% and 18%, of course you want to pay off the one that's charging you 18% first.
Right.
Because it's much more expensive. It's costing you much more money. Your goal is to pay that off as quickly as possible. But first, you could also see if you could transfer to the lower rate card. That would be the best thing to do.
Right.
But paying off the high rate debts first makes the most sense. And if you have student loans, a lot of young people have student loans and credit card debt, you could even stretch out the term of your student loans if you have to, reduce the monthly payment you make to the student loan company, and use it to pay off that high-rate credit card debt, which is on average 14%.
All right. So best thing that any consumer can do right now, whether they're reducing their debt or trying to negotiate with the credit card companies or their debt holders, is that they need to stay in communication. Is that correct? No matter what, even if you're behind or whatever your intentions may or be, you need to stay.
Absolutely. And I feel like, a lot of people now, they're so used to, young people in particular, are used to using the internet and the computer for everything, that they don't pick up the phone. It's sort of a foreign thing, and it actually does make a difference. If you pick up the phone and talk to the person, hopefully you get through to them, because a lot of people that have trouble with their mortgages are having trouble getting through. When it comes to credit card debt, speaking up, explaining the situation really can make a difference.
Right. Yeah, that rotary thing over in the corner is not a wheel of fortune, right?
Exactly.
Get on that thing and make some calls, okay?
Right.
All right, so how important is it then to have a good collection of basic money management principles, at least at this point? I know a lot of people are saving money, but should they take a portion of that saving for a rainy day and pay down some of their debt? Is that part of the basic principles?
Absolutely. Again, say you owe $1,000 on a credit card that's charging you 14%. That means you pay $140 in interest at the end of the year. That $1,000 will only earn you 20% if you put it in $20 if you put it in a bank account, 2% or $20.
Right.
So you're much better off taking that money. If you have $1,000, use it to pay off that high-rate credit card debt. You break even for the year. You're not making interest, but you're not losing money either.
Right.
That is the smartest thing to do financially, and then start working on that savings cushion, that 3 to 6 months worth of living expenses in something super safe like a bank account or a money market fund.
Right. Well, let's talk about that. That's perfect. Okay, so is it safe? I mean, do we go out there and we still look at some of these money market funds considering how turbulent the markets are? Or with the amount of uncertainty that's out there, there's got to be a safe place to put it, right?
It's very troubling for people. You know, the first time in a long time, a money market fund broke the buck last year, meaning that, you know, you usually get $1 back for every dollar you put in, and for a while they couldn't do that.
Right.
That said, I think, you know, sticking with a federally insured banks, as much as we're sort of criticizing banks for handling things poorly, the bottom line is if you have under $100,000, actually it's under $250,000 this year, you will be federally insured if you stick with a super safe bank.
Now, Beth, do you think they'll extend that $250? Because I know it runs out at the end of the year. Do you think they'll extend it past into?
I don't know. That's a great question, and I think nobody knows the answers to that yet. I think they're sort of trying to play it out, and as you know, as more confidence gets back into the system, then they could say, okay, we'll only insure it up to $100,000 because then people will put their money back into money market funds.
All right.
But for now, people are worried, and that's why the government did that.
Right. All right. Yeah, you're absolutely right. Okay, and we'll wait to be seen, right? I mean, at this point, we start getting towards the end of the year. We'll see if they extend that. I think it would be a good idea because it would continue to show confidence. They're willing to back it up to at least that point, as long as they have the money to do it.
I think that's true. I think people have a whole bunch of worries right now, whether it comes to the bank or their investments, their 401k, IRAs, and in Get a Financial Life, I try to talk people through the best ways to manage it in these really, really tough times.
Right. All right. So what's the best way to get started to get out of the debt process?
Well, you have to first, you know, again, consolidate it to the lowest interest rate you can get. For student loans, you want to make sure to get the tax breaks you're eligible for. If you can deduct up to $2,500 in interest payments this tax time, so make sure to do that. Consolidate to the lowest interest rate. Paying just $10 more than the minimum makes a huge difference. If you only pay the minimums, you know, on a typical balance, it could take you 13 years to pay it off, but if you pay just $10 more, it'll only take you 5 years. And you'll save yourself hundreds of dollars in interest. So taking small steps, and the biggest thing, of course, is not charging up more debt. That's critical.
All right, so getting out of debt is one thing. Let's say we've got ourselves out of debt, but we can still save money. For instance, by trimming some of our monthly reoccurring bills like electricity and things of that nature, can't we? So there's still money to be saved there.
Absolutely. I think there are a lot of smart tips. There's some really good websites like mint.com or wasabi.com, and I talk about them in my book, that have good tips for saving and have helpful budgeting worksheets and, you know, that type of thing, because I think people just are overwhelmed. And when you're overwhelmed, you're scared and you're not paying attention to anything. But if you can, you know, reduce your heating bill, reduce your air conditioning bill this year, whatever it is, there are ways you can save money.
All right, absolutely fantastic. Now, Beth, do you have a website yourself?
I do. It's getafinanciallife.com.
All right, getafinanciallife.com, getafinanciallife.com. Now, Beth, where can everybody, our viewers and listeners, find a copy of a Get a Financial Life today?
It's at all bookstores or on Amazon.com, BarnesandNoble.com. So either way you want to find it, you can.
Oh, absolutely fantastic. Beth Kobliner is with us here today. Get a Financial Life is the name of the book. Personal finance in your 20s, 30s, 40s, 50s, 60s. I added that on there, Beth, as you know.
That's right. But you know, it doesn't matter. If you're just starting out, you're starting out.
That's right. All the way up until you're financially out of debt and secure. Beth, thanks for your time today. Appreciate it.
My pleasure. Thank you.
You're more than welcome. All right, get a copy today. Get a Financial Life. Barnes & Noble, your favorite bookstores, absolutely fine. Guy in the corner, support the local bookstore too. Or if convenience is your gig, Amazon.com is a great place too. Amazon.com. Get a Financial Life. Beth Kobliner. Once again, folks, do appreciate her time and her expertise here today. More than ever, do we need to get our financial life in our house in order? Without a doubt, that has to be. And you know what? Americans are waking up and doing that. By force, they're doing it, but nonetheless doing it. We're saving more money now than ever, and that's almost part of the economy. The recovery of the economy might even slow it down, actually. All right, so anyways, all right, coming up next, I'm going to get back to some stocks. I am going to open up the phone lines. Let's do that. We'll get somebody in on over the break, and we got a whole lot more. So stay tuned. Right here, 866-762-2777, all that straight up.